0.8% in February, but still remains way above the central bank's target. Consumer demand is also leveling off, but the labour market remains tight. House prices are showing early signs of bottoming out, but the construction sector, according to economists, still struggling due to high costs that have led to the collapse of a few home builders. I want to show you what's going on with the Australian dollar. Today, no real surprise that we moved away from the move up that we saw yesterday. Much of that was on dollar weakness, US dollar weakness. But today you can see a pullback on that. We're resting at the moment on the 200-day moving average for the Australian dollar against the US dollar. Ahead of the interest rate decision tomorrow from the Kiwi Central Bank, we've got the Aussie down against the Kiwi at 107.34. For more information on this, you can catch up with Daniel McCarthy, my colleague from Daily FX, who's given some more detail on this, and you can find that on the IG platform. Let's look as well at what's happening in some other areas of the market. We've just seen some breaking news coming through from the German economy. It's February data, a little bit backward looking. Trade surplus narrowing to 16 billion euros from 17 billion in January. Exports up 4%. Imports up 4.6%. The estimates have been there for a 1% rise in imports. So the German trade surplus narrowing because of that, exports rising less than imports. I want to show you what's going on with the euro dollar. As I was talking yesterday about this fact that we got the US dollar down, that gave a little bit of a fillip to other currencies against the US dollar, and you can see that move up that we've seen, and we're consolidating at the 109 level at the moment for the euro against the US dollar. Also worth watching for this morning, where we get inflation data across the Eurozone. 10 o'clock this morning UK time, the market expects to produce a price index in the single currency bloc to fall by 0.3% in February month-to-month, still up 13.3% overall for the year-on-year figure, up over last year's number. And the States today, a couple of macroeconomic indicators at 3 o'clock this afternoon. JOLTS, the job openings and factory orders as well. And at 9:30 p.m. tonight, we get API crude oil inventories worth watching out for in the context of that rise that we've seen in the price of oil, which I want to show you about what's happening, because the oil price, I think at the moment, as you can see here from this chart, consolidating at the recent highs that we saw yesterday, a big uptake yesterday on that surprise cut in output that we saw from OPEC Plus at 1.1 million barrels. In addition to the 2 million barrel a day that we'd already seen, which was due to run right the way through until the back end of this year. So this is basically causing some concerns about the outlook for inflation. We're hearing there about the Australian Central Bank leaving interest rates on hold. Now, if this big push up on oil continues, this is going to be a really big worry on inflation, and that could well drive more of these Western economies down into recession. If we see that happen, then of course oil use will start to fall back again. And that is not what these oil producing nations want. We got a little bit of an uptick today at 85.39, and I think actually where we are at the moment, the high 84.42, we're at the highest print we've seen for Brent since the 7th of March. Now let's take a look at a couple of stocks worth watching. One here in the UK, it's Saga. It's a FTSE 250 listed company which is exposed towards those silver surfers amongst us, those that use Saga's services for holidays and insurance and so forth. It swung back to profit. The group reports this morning underlying pre-tax profit of £21.5 million compared to a loss of 6.7 million this time last year, euros. The ocean cruises demand, it says, remains strong, and this year's bookings are on track to meet targets. Insurance is a little bit soft in terms of the overall numbers, but the company says against its strategy, it is doing well. And so far as it's concerned, given the backdrop to the money, or rather lack of money, that's been spent in some of these areas of the market, I think that the company is not too disappointed with what it has in terms of its overall figures. You can see on the chart here, yesterday we closed up the fourth day in a row at 137.5. If we do see an uptick on this, you've then got to beat this area just above where we are at 139, which is the 200-day moving average. We tried that yesterday and failed. But my question is whether or not the last 4 days have already seen any uptick, bearing in mind this company was expected to swing back into profit. It's just a question of the consolidation of the amount it did, the margin, moving up from a loss of 6.7 million this last year to 21.5 million in the current figures. So it's a good performance, but it's a question of whether or not it's already in the share price. Let me just stay on the charts and just wanted to bring up a chart of Rathbones, the FTSE 250. I think it's a FTSE 250 listed wealth manager. It's agreed to merge its business with that of Investec Wealth and Investment Management. Under the terms of the combination, the new Rathbones shares will be issued in exchange for 100% of Investec Wealth and Investment UK's share capital. Now, the enlarged Rathbones Group will, according to the statement this morning, remain an independent premium listed company operating under the Rathbones brand with Investec Group as a long-term strategic shareholder. The statement this morning says the combination represents a significant value creation opportunity for both Rathbones and Investec Group shareholders. I think for me, what it does is it represents this idea that big is beautiful in this game, and you're going to get more opportunity to cut costs against certain fund managers' exposure and the opportunity to buy into certain funds. And the bigger you are, the more benefit you get in terms of your buying power. There's a lot of internal fund management business in there, but they also do buy into other areas of the market. And I think, as I said, big is beautiful in this area, and that's obviously what's going to presumably going to be trying to happen out of this, is they're going to try and cut costs in some areas of the business. So 1878, if you're long on this, your stop goes below underneath this area down here, probably below the 1800 level if you're long on this. But again, like Saga, we've got this 200 period moving average just above where we are at 1939, which could prove a little bit of a headwind. We'll have to see how this stock opens. If you're short on this and you think this is a deal which is not going to represent any upside for share prices, your stock goes above the 200-day moving average at just over the £20 level. 1878 is where we open for Rathbones a little bit later on this morning. Staying on the chart, let's move on to an all-session stock on the IG platform. This is Walmart. Wonderful day yesterday. In fact, it's been a real good rally up from the 200-day moving average, where we saw the market bottoming out on the 10th of March. Ending yesterday at 148.59 at levels there not seen pretty much since the 8th of December last year. Overnight, the US retailer is quoted by Bloomberg as being in the business of cutting 2,000 jobs at 5 e-commerce warehouses in the US, according to this Bloomberg report. Reuters did try to contact Walmart, but it refused to respond. The layoffs follow this push by Walmart to compete with Amazon online. Job losses across the states. Fort Worth in Texas, Pennsylvania, Florida, New Jersey. Additional reductions also planned in California, according to the report. Reuters, back on the 23rd of March, said that hundreds of workers at 5 Walmart facilities that fulfill e-commerce orders were being asked to find jobs within 90 days of other company locations. If this is an upside story at 148.59, your stock goes below the 140 level, $140 level, with a view to taking this up. Next stop-off point is the highs that we saw here back on the 24th of January at 151.94. Let's update you as well on what's happening as well with some of the areas of the market very briefly. We've got a little bit of a move in gold this morning. My point about gold is, I think more than anything else, is the fact that this market is going to find it increasingly tough to get over the 2,000 level. This is the blue dotted line here. We've tried in the last couple of weeks to move up over that level, but failed. And I'm thinking now that this is becoming a really big sort of technical block, I think, for traders. And once it gets beyond there, I think then we're going to see possibly this record high hit at 2070, which was the highs we had back on the 8th of March 2022. What's got to happen before we get there? Possibly weakness for the dollar, possibly stresses and strains in the market. Could that be caused by this rise in oil prices and the worries about upside inflation? Possibly. Gold is a good hedge against inflation. So in theory, this should be a move which is possible. And I'll be talking to one fund manager who runs the AGAU ETF a little bit later on today. And his idea is, of course, we're going to get beyond that. I say, of course, because he's a fund manager which specializes in this area of the market. And he'll be telling us what the chances are about us trading above the 2,000 level in that video a little bit later on. Staying on the chart, just a couple of other things worth mentioning. Another new record high for orange juice yesterday. Continued worries about the fact we're getting an underperformance of the supply coming through, and demand is as strong as it ever was. So I think that's going to be a story of continuation. What happened yesterday on cocoa is we got a drawback. In fact, and yesterday at levels not seen since the 24th of March, just to update you on what's happening in that area of the market as well. And while we're on the commodity markets, third day in a row of losses today for copper, down below the 9,000 level again. That is it. We're back at 10:30 in the markets. Do watch out for Saga and Rathbones to start today's trade. at the top of the hour, where we're still expecting a rise in the London markets, which appears to be outperforming other areas of the European equity markets on this Tuesday morning. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.